Good afternoon, everybody. We'll get that Tiger Grog going. We're going to get it going. We got the S&Ps Wednesday, 3 p.m. Eastern Time, and we got markets at near records across the board. We're going to get into Google earnings, which are coming out after the bell. We got Tesla earnings coming out after the bell as well, and we have an S&P up 0.7% right now, getting a little bit of an acceleration on the Japan deal overnight. You back it up, there's your 7 o'clock news. On Japan, you were trading at 63.46 on that news when it hits the market. And all day, you get a lift intraday as well. We're trading at 63.88, and things seem to be going well with the EU. We will see, but that seems to be the trend. We got to deal with Japan, and we'll get into it, but S&P is higher. NASDAQ 100, we're up by 70 points right now. We're coming right into the highs we had yesterday morning at 23,350. We just made it to 23,325. You're positive by 0.3%. Dow and the Russell, both more than 1% in the green. The Dow up by 455 points, or 1.02%, 45,158. And the Russell up by 1.2% to 2287. Bitcoin pulling back a bit from those highs, 118,645. And crude, lower prices persisting on an overall basis. How about 64.71 this morning? Had a great conversation with Teddy Kegstad this morning. Crude, whether you're talking about dollar, you're talking about dollar yen, our economy as a producer of oil, and that's one of the troubles there, okay? You talk about dollar weakness, folks, all right? We are a producer. We're an exporter of oil. Japan's a consumer. So when you have, one of the things you have here is lower crude prices, right? Well, that's one aspect of continued pressure on the dollar, especially when you put it into the yen. When you talk about consumers, exporters, importers, nonetheless, crude coming right back down to the lows of June 24th. We're at 65.41 right now on crude. You jump to yields. So as I mentioned at the 3 o'clock update there, excuse me, let's see if we're still at that 3.9 right now. I think we are. You sure are. The 10-year is at 4.39 right now. Okay, now we got a little bit of higher yield today. Normally higher yield, well, people are going to chase that yield. They're going to buy dollars to do it, and you would have dollar strength. And that is just not happening, man. Okay, no reprieve whatsoever in dollar weakness right now. We're down from 110 at the beginning of the year, and you have lows out here from June 30th. And as I mentioned, the last time we were challenging these lows, let's back it up a little further, of 96,377. You had the 10-year at 4.19. Now, you could say that the dollar is getting ahead of that, as in you're probably going to have pressure on rates going lower, even though we're getting a rise today. Every hour, not even every day, every hour, right? I'm reading articles about Chairman Powell, the prospect going forward, his chances, where rates go, the new chairperson coming down the line in May. And yeah, that dollar at 97.21, man. Looks like we're on our way back to 96.37. And think about if the dollar's at 97.21 right now, and you have the 10-year near 4.4% right now, okay? I imagine that there's going to be pressure on yields to be lower in the coming year, let alone in the coming months. And as yields weaken, that could be further pressure on the dollar. And you take a look at a longer-term chart of the dollar. Let's go back 5 years. 90 is the spot, man. Okay? 90 is the spot, and that was right after. We'll back it up even further than that. There's your COVID volatility. Okay, let's zoom in a little bit. March 2020, COVID hits. You see the volatility. The dollar has a monthly bar that goes from 94.65 to 102.99. We drive lower. And then in 2021, what starts to happen? Inflation starts to creep up. The prospect that America is going to be raising their rates. We're going to be the only game in town with yield. We're way ahead of everybody else when it came to rates and yield, causing the dollar to go to 115. Things have changed, and we are dramatically ripping lower to start the year. Well, keep this type of a move in your mind when you go from 90 to 115 of what's possible. Because all we've done is go from 110 to 97, and in my opinion, there is nothing in the way of this thing breaking down to this 90 price point. And when you think about the fundamental landscape going forward and interest rates, there's going to be pressure on lower yield, which should pressure the dollar lower. The one thing that is the contrary to that to keep your eye on is inflation. We all want 0% interest rates if it didn't come with possibly a little bit of overheating in the economy, and I'm putting it lightly, right? As rates come down, that's the reason, whether you agree with it or not, that the Fed hasn't done it yet. They're on the verge, it looks like, of maybe giving a cut or two. And I know I'm spending a lot on the dollar today, but this is a big one. Markets price very well. We have extreme dollar weakness right now going on in this market. You have constant pressure on the Federal Reserve chair. And so, yes, we're probably in the short term going to get those cuts, okay? The 10-year will react, not as much as the 2-year. We take a look at the 2-year. Go back to a daily. We still have higher yield on the 2-year, okay? ZN back to the 10-year. And yeah, in the short term, there's going to be some pressure to the downside in terms of downside yields, which is going to have dollar weakness. And the only real risk there is that inflationary forces are then what? Inflationary forces could force it the other way. And round we go. The Fed is supposed to act in a way that makes that round and round less volatile. And that is the risk. And we're going to find out, but the market's saying we got weaker dollar coming at you, man, even with the 10-year at 4.39%. All right, we jump around to some of the headlines. And yeah, let's kick it off with Google. So Google, they're going to be out with their numbers after the bell. It's going to pull up the chart as we go through. Makes a low of 142 in April. Okay, you drive up to the highs in June, early June, of 182. So you're talking about a $40 move from A to B. You pull back, but there was not much volume accelerating past that June 10th and 11th high. On that high in June 10th, you do 33 million shares. Now, on a daily basis, you didn't get it. I was looking at this earlier, but you check out the weekly. Let me take some of this stuff off this chart. Let's remove that one. Let's even remove that one. There's your short term. On the weekly on June 9th, you did 109 million shares. Okay? You did 129 million last week when you break above it, actually. And a 1-to-1 will bring you up to about 203. You got highs out here at 208. So on a weekly basis, you broke that B point with volume. We'll come back. We'll take a look at the expected move. We'll talk some Google. We'll talk some Tesla prior to their earnings. Stay tuned.
If you spend any time online researching trading techniques,